Welcome back to We Are Cosmic, where we dive deep into the world of cryptocurrency and explore the market like professional analysts. Today, we are focusing on XRP, a cryptocurrency that has been attracting significant attention from institutional investors across the globe. If you enjoy clear, easy to understand breakdowns of crypto trends, insights into market movements, and institutional flows, make sure you hit that like button and stay tuned. Currently, the crypto market has been relatively flat with price movements lacking major direction. XRP is trading around $2.30, slightly down by 0.25% on the day. Despite minor daily fluctuations, there is a strong underlying narrative. Institutional investors continue to show confidence in XRP even when other assets experience selling pressure. This is particularly noteworthy when we look at global inflows, ETF activity, and exchange supply trends, which are all signaling increased accumulation of XRP. Let's start with a closer look at the institutional picture. According to a recent Wisdom Tree report, XRP is the only major cryptocurrency that consistently saw institutional inflows across every region and product type in recent months. While other cryptocurrencies experienced outflows, XRP continued to attract substantial capital. For example, in Europe alone, XRP brought in 549 million Shaori, surpassing Ethereum's 185 million Shaori and other major altcoins. Outside the United States, XRP attracted 252 million BRAUs, almost matching Bitcoin's inflows of 268 million BRAUs, despite Bitcoin's much larger market presence. This shows that dollar for dollar, institutions are prioritizing XRP over other major cryptocurrencies. In the United States, the newly launched synthetic XRP products saw inflows of a new 141 million YA, significantly higher than Solana's 26 million SIGA, highlighting XRP's growing institutional preference. Even during periods when Bitcoin and Ethereum ETFs saw combined outflows exceeding 6.4 billion, right? XRP continued to attract fresh capital globally. This sustained interest indicates confidence in XRP's utility, liquidity, and potential as an institutional-grade digital asset. On the HAS exchange side, XRP's total holdings on exchanges have been steadily declining, signaling that accumulation is happening off-exchange. Since February, roughly 6.45 billion XRP AUs has been removed from exchanges, while today top accumulations on platforms like Binance, Bithumb, and Coinbase continue to add millions of XRP. Exchange supply remains near multi-month lows, a clear indicator of quiet accumulation. As volatility increases, these conditions suggest that pressure is building in the market, often a precursor to notable price movements. Beyond numbers, XRP is also making strategic moves globally, with partnerships between Ripple and institutional platforms like Bitstamp, and investment from major market players like Citadel, Trao. XRP's position as a bridge asset for institutional finance is strengthening. This is complemented by the introduction of programmable stablecoins, such as euro-backed digital instruments, positioning XRP as a key player in cross-border and institutional transactions. Continuing from our last discussion, one of the most significant trends in the XRP market right now is the sustained institutional inflows across multiple regions. This is a rare phenomenon in the cryptocurrency space, as most assets experience outflows during periods of market uncertainty. In the case of XRP, institutions are not only maintaining positions, but actively increasing exposure, signaling strong confidence in the token's long-term utility. According to recent reports, XRP ETFs have been performing exceptionally well, extending net inflows to 13 consecutive days and accumulating nearly 875 million in total since mid-November. These inflows are not limited to one geography. In Europe, institutional investors have added over 549 million AUs into XRP, surpassing other major altcoins including Ethereum and Solana. Outside the United States, XRP attracted 252 million PAUs, nearly matching Bitcoin's inflows despite Bitcoin's much larger market size. This indicates that on a per-dollar basis, institutions prefer XRP to Bitcoin in these regions, highlighting its strong positioning as a reliable digital asset for professional investors. Within the United States, synthetic XRP products have also seen substantial inflows, with 241 million Added in 2025, XRP ETFs have outperformed other altcoins by a wide margin. Even during a month where Bitcoin and Ethereum ETFs collectively lost our $6.4 billion, or XRP remained resilient. This demonstrates a clear institutional focus and validates the growing narrative that XRP is not just another altcoin, but an art-preferred instrument for regulated and professional investment. Examining Fashi exchange supply, we see further confirmation of accumulation trends. Total XRP on exchanges has been steadily declining, now sitting at around 16 billion with roughly 6.45 billion XRP removed from exchanges since February. This long-term reduction in supply is an important signal, showing that XRP is moving into private wallets and institutional custody rather than sitting idle on trading platforms. Today's top accumulations include Binance, 2.43 million, BitThumb, 2.43 million, and Coinbase, 675,000, while some exchanges show minor outflows. The trend points to a broader, quiet accumulation that often precedes notable market movements. Liquidity dynamics are also shaping market conditions. Asian markets continue to dominate XRP trading volumes, with platforms like Upbit, Binance, and BitThumb reaccumulating tokens. Mid-tier exchanges such as Coinbase and Gemini are experiencing rotation, reflecting both retail and institutional participation. With shrinking exchange supply, expanding volatility, and consistent ETF inflows, pressure is building in the market, a classic precursor to upward price momentum if conditions align. On the institutional adoption side, Ripple's partnerships further enhance XRP's market potential. Major players such as Citadel and Robinhood are integrating XRP infrastructure, including tokenized assets and ETF platforms. Citadel's investment in Ripple, combined with XRP's role as a programmable settlement instrument for euro-backed stablecoins in Europe, positions the cryptocurrency as a strategic asset for institutional liquidity management. Ripple is actively bridging the gap between traditional finance and blockchain-based solutions, making XRP an attractive asset in global financial systems. Finally, these trends cannot be separated from broader macroeconomic influences. Market volatility, global interest rate changes, and carry trade adjustments may affect short-term sentiment. However, XRP's sustained inflows, strategic adoption, and reduced exchange supply suggest that it is uniquely insulated from temporary market fluctuations. While daily price changes may seem minor, the structural foundation being built by institutions points towards significant long-term momentum. XRP is no longer just a digital asset. It is evolving into a bridge asset and liquidity provider for institutional finance. One of the key developments driving this narrative is Ripple's introduction of euro-backed programmable stablecoins designed to operate seamlessly within the European financial ecosystem. Unlike retail-focused stablecoins, these instruments are tailored for institutional usage, offering collateralized settlement and mandatory transparency for central banks and regulatory bodies. Ripple's institutional strategy is evident through its consistent involvement in high-level financial discussions. For example, Ripple participated in a confidential meeting at the Bank of England alongside senior representatives from major European banks such as Barclays, Santander, Deutsche Bank, and BNP Paribas, as well as policy advisors from the European Central Bank, ECB. The discussions focused on future euro liquidity settlement, cross-border clearing, and interoperability with European payment systems like SEPA, TIPS, and Target 2. These meetings highlight how XRP is being integrated as a settlement layer capable of facilitating near-instant cross-border transactions. The euro-backed stablecoin developed by Ripple is strategically positioned to become the default European standard for programmable settlement instruments. While it is not mandated by law, its efficiency and alignment with compliance and supervisory regulations make it an attractive solution for financial institutions. By harmonizing with regulatory architecture and offering real-time settlement capabilities, XRP is effectively being positioned as a neutral bridge asset, providing liquidity across multiple jurisdictions without creating counterparty risks. This positions XRP to play a central role in institutional adoption and cross-border payment flows. Beyond Europe, Ripple's partnerships are expanding globally. Notably, major U.S. financial players are also integrating XRP infrastructure. Robinhood has partnered with Bitstamp, which is working closely with Ripple to tokenize stocks on the XRP ledger. Citadel, one of the largest market makers in the United States, has invested directly into Ripple, highlighting confidence in XRP's growing institutional utility. Once major market makers fully adopt XRP, the adoption curve could accelerate rapidly, leading to broader recognition and increased participation by both retail and institutional investors. Institutional inflows continue to reinforce this strategic positioning. The continuous accumulation of XRP through ETFs, coupled with the declining supply on exchanges, signals that XRP is being hoarded by professional investors. Exchanges like Binance, Bithumb, Coinbase, and Gemini report significant inflows, while outflows indicate long-term holding patterns. This accumulation is happening quietly, under the radar, but it is a clear indication that professional investors are preparing for substantial growth. Shrinking supply combined with rising demand sets the stage for potential price momentum when market conditions align. XRP's strategic positioning is further strengthened by its stablecoin ecosystem, which includes RLUSD and the euro-backed digital asset. Having a native stablecoin enables Ripple to create programmable financial infrastructure that can integrate with banks, payment providers, and institutional investors. This is a major differentiator compared to other altcoins that lack both regulatory alignment and institutional-grade settlement capabilities. By offering a reliable settlement mechanism alongside XRP, Ripple is bridging the gap between traditional finance and blockchain technology, making XRP a critical component in the evolving financial landscape. Finally, the macroeconomic environment also plays a role. With potential Fed rate adjustments, global interest rate shifts, and the unwinding of carry trades, institutions may seek safer, more liquid assets like XRP for hedging and settlement purposes. These global dynamics, combined with XRP's institutional adoption, shrinking supply, and programmable stablecoin utility, make it a uniquely positioned asset in the cryptocurrency ecosystem. Now that we've explored XRP's institutional inflows and strategic positioning, it's essential to examine the macro factors that could influence XRP and the broader cryptocurrency market. One of the most significant drivers in global finance right now is the carry trade, a strategy where investors borrow in low-yield currencies and invest in higher-yielding assets. While this can generate profits under normal conditions, when interest rate differentials compress or global uncertainty spikes, leveraged positions are forced to unwind, creating volatility across markets. Historically, the unwinding of carry trades has immediate effects on equities, bonds, and foreign exchange markets. High beta and momentum-driven assets, particularly tech stocks and small-cap equities, often experience the first wave of selling. During these episodes, the market undergoes mechanical de-risking, and investors close positions in risk assets to repay funding currencies. This happened in August 2024, when the S&P 500 experienced one of its largest one-day losses due to carry trade liquidation. The resulting volatility and market pressure create conditions where capital often flows into alternative assets, including cryptocurrencies like XRP. XRP's role in this environment is particularly interesting. As a digital bridge asset, XRP is positioned to absorb inflows when institutional and professional investors are seeking liquidity outside traditional markets. Its shrinking exchange supply, coupled with ETF inflows, suggests that institutions are treating XRP as a strategic liquidity reserve. While the stock market may experience temporary selling pressure due to macro shocks, XRP could benefit from capital reallocation as investors look for alternative settlement and investment options. Global macro developments are also influencing sentiment. Interest rate policies in the US, Europe, and Japan, along with potential economic slowdowns, create uncertainty in both equity and crypto markets. In Japan, for instance, discussions around ending near-zero interest rates impact carry trade flows. Japanese investors who historically favored high-risk assets like cryptocurrencies during low-yield periods may adjust positions based on changes in interest rates. This creates an indirect but significant influence on XRP liquidity and market dynamics, particularly since Asia remains a dominant player in XRP trading volumes. Additionally, regulatory developments are shaping the landscape. In the United States, the CFTC and SEC are actively working on rulemaking and establishing regulatory frameworks for digital assets. These steps aim to bring institutional-grade clarity and protection for investors while encouraging adoption by American companies. As regulatory certainty improves, more capital is likely to flow into XRP and other compliant assets, reinforcing existing accumulation trends and potentially driving further institutional interest. Volatility in this context is not inherently negative for XRP. In fact, periods of high volatility often coincide with accumulation by professional investors who view price dips as opportunities to acquire additional tokens. XRP's ETF inflows and exchange dynamics suggest that accumulation continues even when short-term price action is muted. Multi-month lows in exchange supply indicate that XRP is being removed from circulation, creating a tighter supply-demand dynamic that could amplify the impact of future inflows. It's also worth noting that macroeconomic stress often accelerates technological adoption. With digital settlement instruments like euro-backed stablecoins and Ripple's XRP ledger infrastructure, institutions have a ready-made tool to facilitate cross-border payments and liquidity management. During periods of market disruption, these tools become more attractive, reinforcing XRP's strategic importance. Moving forward, it's critical to examine how Ripple is leveraging strategic partnerships and global adoption to cement XRP's position as a foundational financial asset. Ripple has not only focused on individual investor interest, but has systematically aligned with major financial institutions, payment networks, and regulatory bodies worldwide. This approach positions XRP not just as a speculative asset, but as a core utility token for global financial infrastructure. One key example of Ripple's strategic global positioning is its active engagement in Europe. The euro-backed stablecoin, designed for programmable settlement, demonstrates Ripple's ability to integrate into existing banking and payment networks. By collaborating with institutions like Barclays, Deutsche Bank, Santander, and BNP Paribas, Ripple ensures that XRP functions as a bridge currency for cross-border payments, reducing reliance on traditional correspondent banking models. This is not just a theoretical advantage, it has practical implications for transaction speed, liquidity efficiency, and risk management, making XRP a critical tool for institutional financial operations. Ripple's partnerships extend beyond Europe. In Asia, major exchanges such as Upbit, Binance, and BitThumb dominate XRP liquidity, reflecting active market participation in regions that historically account for substantial crypto adoption. Institutional investors in these markets are accumulating XRP quietly, contributing to shrinking exchange supply. This is a key signal. When professional investors consistently remove XRP from exchanges, it points to long-term holding and strategic positioning rather than short-term speculative activity. In the United States, Ripple's integration with platforms like Bitstamp and Robinhood, alongside direct investment from market makers like Citadel, highlights its penetration into mainstream financial systems. Citadel's involvement underscores the level of confidence institutional investors have in XRP's future. Once major market participants adopt XRP for liquidity management, a domino effect is likely, with other institutions following suit. This positions XRP as a go-to asset for global corporate finance and institutional trading strategies. The implications of these partnerships are far-reaching. XRP is uniquely positioned to facilitate cross-border payments, tokenized securities, and programmable financial instruments. With Ripple's stablecoin initiatives and XRP ledger capabilities, the ecosystem enables near-instant settlement across multiple currencies and jurisdictions. For example, transactions using euro-backed stablecoins on XRP Ledger can achieve real-time finality, reduce counterparty risk, and optimize capital efficiency for banks and corporate clients. This efficiency is a critical factor that differentiates XRP from other cryptocurrencies like Bitcoin or Solana, which primarily function as store of value or speculative assets. Macro trends also support XRP's strategic role. Regulatory clarity, combined with global interest rate shifts and the potential unwinding of carry trades, increases the demand for liquid, regulated, and efficient settlement assets. XRP's shrinking supply, coupled with sustained institutional inflows via ETFs and private holdings, creates a tight supply-demand dynamic. This environment positions XRP to be the preferred asset for institutions looking to manage liquidity in a volatile macroeconomic landscape. Additionally, Ripple's forward-looking approach ensures that XRP is not only relevant today, but is prepared for the future of global finance. By integrating with central bank frameworks and adopting compliance-aligned programmable stablecoins, XRP is creating a foundation that aligns with potential regulatory mandates while remaining technologically innovative. Institutions and corporations that adopt XRP now may benefit from operational efficiency and access to liquidity networks that could become standard in the next wave of financial infrastructure evolution. It's time to focus on XRP's long-term potential and what it means for the evolving financial landscape. XRP has moved beyond being simply a cryptocurrency. With its shrinking exchange supply, institutional inflows, and stablecoin integration, XRP is positioning itself as a strategic liquidity and settlement asset that could play a central role in the global financial system. One of the most important indicators of XRP's long-term potential is the consistent institutional accumulation across regions and products. Reports show that institutions are adding XRP at rates that exceed other major cryptocurrencies, even during months when broader markets experience heavy selling. This demonstrates a strong global confidence in XRP and highlights its appeal as a reliable, liquid asset that can serve both as a store of value and a bridge for institutional settlements. Supply dynamics are equally significant. The total XRP available on exchanges continues to bleed out, with billions removed since February. This persistent reduction in available supply, combined with growing institutional demand, creates a tight market where scarcity could influence future price trends. While XRP is not immune to volatility, these structural factors provide a strong foundation for potential long-term growth. Reduced exchange supply means that when demand surges, the market has less XRP available for immediate trading, amplifying the impact of large purchases by institutional investors. Ripple's institutional and regulatory strategies further reinforce XRP's future potential. By collaborating with central banks, major financial institutions, and global exchanges, Ripple is creating a regulated, compliant infrastructure that can integrate seamlessly with traditional finance. Euro-backed stablecoins and the XRP ledger enable near-instant, low-cost settlement of transactions across borders, reducing counterparty risk and operational friction. These advantages position XRP not just as a speculative asset, but as a functional financial utility. Macro factors also influence XRP's long-term outlook. Global economic uncertainty, including interest rate changes, carry trade adjustments, and potential market shocks, creates conditions where investors seek efficient, liquid, and scalable digital assets. XRP, with its shrinking supply and growing institutional adoption, fits this profile perfectly. It is increasingly seen as a go-to asset for managing liquidity and facilitating cross-border payments, which could drive continued interest from both institutional and retail investors. The broader adoption of XRP also benefits from the ongoing development of its ecosystem and technology. XRP Ledger's capabilities, including tokenization, smart contract-like functionality, and integration with stablecoins, provide financial institutions with a versatile platform for building digital finance solutions. Ripple's continued expansion into new regions and markets signals that XRP is not only relevant today, but is prepared for the next generation of global financial infrastructure. In conclusion, XRP's long-term potential is supported by multiple factors: strong institutional inflows, shrinking exchange supply, regulatory alignment, technological innovation, and strategic global partnerships. These elements combine to create a foundation for sustainable growth and adoption in the coming years. While short-term volatility is inevitable, the structural dynamics of XRP suggest it could remain a critical asset for both institutional and corporate finance. For viewers of We Are Cosmic, the key takeaway is clear. XRP is more than a cryptocurrency. It is evolving into a centralized utility for global finance with institutional confidence, global adoption, and a regulatory compliant framework supporting its long-term trajectory. Monitoring macro trends, institutional activity, and market dynamics will be essential for understanding XRP's continued evolution in the global financial system. Thank you for following this 6-part breakdown. By analyzing XRP from institutional, technological, and macroeconomic perspectives, we gain a clearer picture of how this cryptocurrency is uniquely positioned in the market today and potentially in the future.